Hello, I'm Russ Mould, AJ Bell's Investment Director. I'm going to look at one collective which is proving popular right now among those who think this is a good time to get exposure to domestic stocks. In fact, last week, it was one of the 10 most popular buys on the AJ Bell Invest Centre platform. OEIC question is AXA Framlington UK Select Opportunities, which has been run by Nigel Thomas since 2002. Thomas has built up a good performance record over the last 5 to 10 years, and the fund has handily beaten its UK All Companies benchmark over that time span. This chart shows performance for the year to date and annualised returns over periods of 3, 5 and 10 years relative to the benchmark. Thomas's style is growth at a reasonable price, GARP, and the focus is more on capital growth than income, as a relatively modest yield of 0.9% on the fund suggests. For all of his long-term prowess though, Thomas has seen the fund suffer some outflows in the past 12 months, although the OEIC does get a 4-star score from Morningstar for those who value such indicators. The sceptics look to put forward 3 explanations for why there may have been these outflows. First, after a blistering run, performance hasn't been quite as notably strong in the past 12 to 24 months. Second, the fund is now so big, at £4.5 billion sterling, some do wonder whether Thomas can be nimble enough, a point which may be linked to concerns over performance. And thirdly, Thomas may look to retire at some stage in the not too distant future. Supporters of the fund will counter all 3 points fairly quickly. Thomas's GARP approach means his investors will need to be patient at times. He won't chase momentum, and it can take time for a catalyst to crystallise value in a pick. Yep, size is an issue, but the fund does have breadth and depth, and Thomas's role as co-manager of AXA Framlington UK Midcap means he does have a good perspective on the overall UK market. And also AXA Framlington does have a succession plan in place, with Chris and John, the lead manager on AXA Framlington UK Midcap, already lined up. Now his time at AXA Framlington UK Smaller Companies, F&C UK Smaller Companies, and BlackRock Throckmorton Trust means he's got plenty of experience with the market in small and mid caps in particular. Now, the ongoing charge of 0.93% does take care of that 0.9% yield that's on offer, and dividends are paid semi-annually. Thomas's fund currently has 63 holdings, but turnover is low, and that does help cut the cost of total ownership. Although the FTSE 100 represents over 80% of the UK's total market cap, Thomas has just got 52% of the fund here right now, with 37% in the 250 and 4% in each of the small cap and AIM indices. Cash represents barely 1% of the allocation. Top holdings include ITV, broad plastic product supplier Essentra, retailer Dixon's Carphone, and online real estate agent Rightmove. The last name is particularly interesting, as one theme that runs through the portfolio is firms which have a dominant online position in their industry. Betfair and Autotrader are other sizable positions that Thomas has. This fits with his long-term approach of trying to back firms with good business models, strong management at a decent valuation, rather than trying to second guess where the markets are going to go overall. So thank you for watching, and I look forward to seeing you next time.